Èmi pẹ̀lú àwọn bọ̀dá yìí a lọ sí command nígbà yẹn. Mo rántí. Ẹ̀gbọ́n ti Founders Day. Àwọn òṣèlú méjì ló fọ́nà.
Good morning, Mr. Matthew.
Good morning.
I think you are the first person to join our call. Thank you so much.
Yeah. Imagine the person won't do the shop for you and don't pay for sponsor ad. Look it up on the video. Because this sponsor, he pay teacher, make you advertise in business, people. So the channel be making your business, make kind of the Russian. They pay for sponsor ad. You should pay for sponsor ad. Let people they see her. So that you go patronize.
Name is what?
Constance Chibuzo.
Eh?
Chibuzo Constance. Constance Chibuzo.
Chibos or Ostra?
Constance. Constance.
Orphan.
No, Constance.
Okay. Ostan.
Men are pissed. Did you see there's a new app called T where women can post about dudes they've dated to warn other men about you? So now men are pissed. They're making an app called like Body Count where guys will be like, don't date this girl. She's been run through and stuff like that. It's going to be big war, gender wars online.
Good morning, everyone. My name is Emmanuel, and welcome to the Dukia Gold World Press Conference for August 2025. Thank you so much for joining early, and the conference will start in earnest. Thank you, Lami Salio, Anne Wells, Walter, Ejiche Benga, John Paul, Christian, Mohammed, Oladayo, Perpetual, and Philip. Thank you all so much for joining in with time. If you know anyone that should be here, maybe you have a friend, a family member, a brother, a sister, a son, or a daughter who you are feeling that will learn more about gold as an investment class and all the whole how you can now leverage gold to build sustainable wealth. You can please share this link to each and every one of them and invite them all for this presentation. Thank you so much. We'll begin in earnest. Thank you so much for joining this management seminar, the August 2025 series. My name is Emmanuel and I'll be leading you through this presentation. We thank you for being a part of us, for always joining our seminars. We've been doing this every last Thursday of the month. We did one on July and we did one on June, and we are doing the one for August. I can see our directors are already here. I can see Anne, I can see Benga. I can see John Paul, Joke, Olushola, Patrick, Philip. And thank you so much for joining. If you know anyone who would you would love to be a part of this presentation, you can just send them the link from the Zoom platform immediately and they will all join. Thank you so much. Today, this will be our topic of emphasis. Gold as Africa's strategic reserve, building stability, trust, and growth. We are speaking to Africans and we're speaking to Africa using Nigeria as a case study, how gold is a strategic reserve. It's not just a natural resource, but how it's a strategic reserve to the growth and to the development and to the building of the African continent. To just give us a little perspective on this particular topic, I've seen my chairman around, so I'll just invite him to the floor to just give us perspective on this topic. Thank you so much for joining in. Chairman, sir, you have the floor.
Okay, thank you, everyone. As usual, I must thank everyone for joining on time. We are going to be talking to each other on something that we all take for granted, but honestly, we need to pay particular attention to, especially given the situation around the world. The United States started something very unique. I would say something very odd. What they started. Hello?
Sir, you can go on. We can hear you.
Sir, you can go on. We can hear you. There's an echo, so I'll need to adjust my. But can everybody hear me now? It's okay.
Thank you all so much for joining. The chairman will be back shortly to give us perspective on this particular topic, how gold is Africa's strategic reserve. From the participant, I can see Adetutu, I can see Musope. Oh, Mr. Oleawe is also around. Thank you all so much for always being a part of our presentations. Chairman will be back shortly to give us perspectives on this particular topic. And please, I would just recommend as a suggestion to everyone that while you are joining the meeting, this is going to be like a couple of presentations. We'll please advise you to just put off your microphone, except you're a co-host. So just put off your microphone so that we won't be hearing echoes from your end. As you join the meeting, just kindly put off a microphone. And if you're called on to ask questions or to give opinions, we will allow you to put on the microphone. Or definitely you still have an option to actually join the chat to give more information concerning this topic. Chairman, sir, you are unmuted.
Yeah, once again, I'm extremely grateful to God for bringing us all to this meeting. As is usual for us, we try to host everyone on a very, very important subject matter. The subject matter for today is gold as Africa's strategic reserve. Sometimes we all take it for granted.
Something worse tomorrow.
Sorry.
Continue, sir. Continue, sir.
Administrator, you have to be up and doing in muting every microphone so that we can start. Right? Please mute every microphone and just enable one microphone. So the enablement of microphone should be on your side. So do it automatic so that we can be well arranged. Yeah, it's okay. Okay. Thank you very much, moderator, and thank you, everyone. Again, we are talking to you today about gold as Africa's immediate and future strategic reserve. And the reason is very simple. Every one of us in Africa has access to precious metals, especially gold. Everybody in Africa also has access to wealth, especially in every form that wealth is given by God. Most people don't distinguish their wealth into species or into special categories. So we'll be talking to you today about money as part of a strategic reserve. We'll be talking to you today about a commodity as part of a strategic reserve. We're talking to you about an investment portfolio as part of a strategic reserve. I would, of course, be talking to you about fiat currency as part of a strategic reserve. In each of your reserves or investment portfolio, as an African or as an African nation, or as a central bank, or as an individual, or as a pension fund, three things we need to worry about in the new world order is how to build stability, how to build trust, and how to manage and grow our wealth. Of course, we now live in a world where there is a huge cry about tariffs and tariff structures. We've gone from a world where we have bilateral agreements to just unilateral agreements, or what they call doing it just by a stroke of a pen. America started it. America is going to continue with it. The rest of the world is going to copy it. Therefore, individuals need to find a way of building stability around their portfolio, around their wealth. Nations have to do it. Africa must do it. And indeed, I would say that Nigeria too has to do it. I have a slide I would like to share with you. And in sharing that slide with you, I would then say we should try and move things forward. God bless you.
Okay, thank you so much, sir, for that welcome address. As he rightly said, we are trying to talk about gold as Africa's strategic reserves. Now, you may see from this perspective that, oh, it's for Africans, it's for policymakers, it's just not for me. But in this context, we are both talking to Africa and to Africans as a whole. So as an African, this particular presentation is for you. Now, you know that we are always acknowledge disclaimer statements on each of our presentations we do. That we're going to be using forward-looking statements, and all investment decisions you make has to be done through your investment advisor. We are also showing you members of the team of Dukia Gold. We can see the MD, the chairman, the chief operating officer is definitely on this call, and all members of the team making to make this event a success. Now, what are we going to be talking about? Currency, money, commodity. How does gold fit in all these types of reserves? What is the difference between a currency, a fiat currency, money, which is a store of value, and a commodity, which has intrinsic value? Why is gold a monetary anchor instead of fiat currencies? And can gold serve as both a reserve asset and as a form of liquidity in modern African economies? Now, we are going to use some statistics to show you how the central banks across the world are stockpiling gold and what is their motive, and what is their motive for stockpiling gold as against stockpiling fiat currencies. We are going to talk about gold as a form of how the three-legged tools of gold make it a valuable store of value, like stability, the trust, and the risks involved. Lastly, we are going to look at the mines to market integration and how Africans have been denied from owning and developing parts of Africa's gold value chain, and what other countries are doing to actually resolve this issue. Lastly, we are going to talk about the global move for investors, which is you and I, and African sovereign future, how we can actually make part and take part in this sustainable economy. Next, we are going to take conclusions and we are going to talk on questions and answers. We'll invite the chairman to actually give the welcome address on behalf of the team. Sir, can you come to address us?
Once again, thank you very much, Emmanuel. As Emmanuel has given a synopsis, my job is a lot easier. My job is to ask each and every one of us if we can truly define and distinguish between money and fiat currency. And if we can quickly distinguish between fiat currency and investment. And of course, quickly distinguish between investment and commodity. For anybody who recognizes money, money is said to be a store of value. But that store of value basically is represented by something that is physically tangible. And if all of us remember many years ago, gold was perhaps the only tangible thing that everybody carried around as a mode or means of exchange. Of course, before gold, there was trade by barter. And trade by barter meant that you had commodities, whether it was cocoa, banana, and gold itself, in which case you simply say, give me this quantity of banana, because I think my banana is worth 1 bushel of wheat. You basically are able to exchange it. In order to make the world a much easier place, IOUs were issued, in which case I simply say, I owe you 1 banana, and you owe me 1 bushel of rice or wheat. But in order to be able to standardize it, that piece of paper, which became like an IOU, was backed up most of the time by one important commodity. That commodity had always been gold. Of course, gold was eventually replaced a bit by oil, and eventually, at one point in time, both gold and oil were delinked completely from that IOU. That IOU became currency. That currency became what everybody in the world carries around in their pocket. It's called paper money. The only thing that is good about that paper money is the trust we all have in the government that issued it, or in the individual that issued it, that that individual will perform and that that government will remain very faithful to managing their economy. So there is a huge difference between money and a very, very large difference between fiat currency. As you know, fiat currency can be local issued fiat currency, just like the Naira, and it can have what they call international appeal. Or it can be an internationally recognized fiat currency, maybe like the dollar, recently the yen, or perhaps like they say, the World Bank basket, which is called an ICU. Whatever the currency that you carry in your pocket is just as good as the fiat of the country that issued it to you. So it's possible for you to have ₦1 million today, or actually be a Naira billionaire and walk into Dahomey and say, I'm a billionaire. And if there's no basis of exchange of your currency, the money you have is very, very localized. So fiat currencies have a huge opportunity around the globe, but basically fiat currency also has material challenges around the globe. What you then have working in tandem with fiat currency is commodity. So for instance, Saudi Arabia sends out a huge quantity of oil every day, just like Nigeria. And that crude oil basically has to be managed. And in managing that crude oil, somebody has got to pay for it. So they find an international currency where everybody can at least have a clear idea of what the value to pay for it. So you find sometimes oil is selling at $23, sometimes selling at $73. What has not changed is the fact that it's only one barrel that is being sold at that price. What has also not changed, if you remember, is that 1 ounce of gold has always had a price. So money, currency, and commodity sometimes come to play with each other. And because one is a bit more easier to transport and transfer electronically, everybody has come to recognize fiat currency, especially international fiat currency, as a store of value. But everybody knows at the end of the day that if they were to ask you how wealthy you are, you need to show one more thing, which is called a house or any other form of investment in stocks, bonds, and shares. So today, we'll be talking to you very, very succinctly about money in its real sense, about fiat currency in its true sense, about investments, especially gold in its true sense, and of course about commodities in its true sense, and show you very clearly that in every instance, the only recurrent decimal, the only thing that keeps showing up either as money or as currency or as commodity or as investment is gold. After all, if you said you had 1 million shares of Guarantee Trust and you wanted to take it to London tomorrow, or take it to Dahomey day after tomorrow, or take it to Germany, and you wanted to leave it on the table as a mode or means of exchange for another house or perhaps another share, they won't take it from you. They will tell you, first go and convert it into a local currency, convert it from the local currency into dollar, then you bring it. But honestly, if you had gold in your hand in Lagos, and you had gold in your hand in Dahomey, or you had gold in your hand in Germany, or you had gold in your hand in America, you will be given instantaneous value of gold as it currently stands. Therefore, gold transcends currency, gold transcends commodity, gold transcends investment, gold also presents itself as a unique store of value that is borderless, it is not issued like a fiat currency, is actually independent of it. It can protect you against risk. It can protect you against the vagaries of uncertainties. It can also be a true store of value. Luckily, Africa has a huge quantity of gold. Nigeria does have some gold, and we will talk to you as to the reason why we believe Africa and Africans should think very deep when they are considering investment. The best investment that we believe exists in the near future to be able to diversify and manage your portfolio is gold. On this happy note, I'll yield the microphone to our presenter and allow him to do justice to the subject matter. Good morning, everyone. Good afternoon, wherever you are. And thank you all for joining from every part of the world. Once again, we welcome you to Dukia Gold. I'll speak to you again at the end of this presentation. Over to you, Mr. Iman.
Thank you so much, sir, for giving us that welcome address, introducing us to the subject of currency, commodity, and money. Now we begin with the slides. Special thanks to our Managing Director, Madam Boso Wolabi, for actually making sure that these presentations hold definitely in earnest. So if you listen closely to the welcome address of our chairman, he gave successive points on the difference between money, currency, commodity, and investment, and what is actually applicable to each of these sectors. Because most times we discover that most people believe that gold is a store of value. But once we introduce them as gold is a medium of exchange, they begin to be taken aback and get confused on the whole subject. So we are hoping that this presentation will actually do justice to that. First and foremost, we'll define what is money. What is actually money? Money is anything that functions as a medium of exchange, a unit of account, and has a store of value. Money has three basic uses. A medium of exchange, you can exchange it with another thing. A unit of account, you can now store it in a bank or in a vault and use it to measure your net worth. And it's a store of value. You can keep it to actually hedge your tomorrow. Now, to qualify an item as money, an item must be durable. It must not be easily spoiled or stolen. It must be portable, used interchangeably, divisible, uniform, limited in support, and widely accepted. Now, the concept of money was even used by gold, fiat currencies, digital tokens can function as money because each of these units that I mentioned can function as a medium of exchange, a unit of account, and a store of value. Definitely, how did the concept of money come into place? Because before the invention of what we call money, most economists relied on trade by barter, whereby, okay, if I had 1,000 cows and I needed a goat, I would trade maybe one cow or half of a cow or two cows for a couple of goats. So most individuals were using on trade by barter system to ensure that goods and services are exchanged with each other. But after the trade by barter used by our forefathers, a problem now happened to that system called the double coincidence of wants. Now, the double coincidence of wants states that a transaction could only take place if both participants had something that the other person needed. Let's say I have 1,000 goats and you have 1,000 cows, and we both need a chicken. We cannot trade by barter with each other. We'll have to look for someone else to use to exchange those values and commodities for each other. And that's when the concept of money came into play. The concept of money was to help reduce transaction costs and make it standard for people to transact value with each other. And as economies got complex, people needed to trade by barter across the globe. Governments now came together and issued what we call a currency. A currency is a form of money issued and recognized by its government as its official medium of exchange. So a currency is recognized by a particular government as its official rate. You can no longer use cows, you can no longer use goats or chickens to trade. They are going to use a particular denomination, and that's what we call currency. They have no intrinsic value in themselves, but are backed by government trust. So the central bank governor has to authenticate each naira notes that it's printed to verify its authenticity and its use as an exchange of value. And we know all forms of currencies. We have the euros, the Nigerian naira, the dollars, and many more. Now, the problem with currency is that it doesn't have a value in itself. It's just issued by a government and the government states its value. But a commodity, it's a basic good with intrinsic value, often used as an input in production or consumed directly and traded globally. So the difference between currencies and commodities is that commodities have intrinsic value, independent of a government decree. A commodity doesn't need a particular government to state its rules and regulations. And a commodity doesn't need the central bank system to actually verify its use. So commodities are fungible and have value independent of a government decree. And each of these medium of exchanges, which is money, which is currency, and another is commodity, gold has actually shown as being a medium of exchange as money, a medium of exchange as a currency, and a medium of exchange as a commodity. Now, this is just some basic points you should note. All currencies are money, but not all money is currency. All currencies are money, but not all money is currency. Gold functions uniquely as both a commodity and money, which is why it has been historically used as a form of currency. And fiat currencies lose value during crisis. I told you that currencies don't have any intrinsic value, but commodities retain and increase in value, which is why it is a basic and a strategic reserves, bringing it down to the concept of our presentation. As I said earlier, gold's unique characteristics make it an all-weather investment and wealth preservation asset. Its role as a hedge against inflation, geopolitical risks, economic crisis, and its low correlation with other asset classes like fiat currencies provide significant benefits in uncertain times. Gold as a store of value, as a medium of exchange, will continue to play an integral role in wealth preservation, making it an essential component of a well-diversified portfolio. So if you're talking about a diversified investment portfolio and you are not thinking about gold, you are losing out on a huge benefit. Now, most people actually ask, can gold function both as a reserve asset and as a form of liquidity? Because most people feel, in quotes, that gold is not liquid, that with the fiat currencies, you can just bring it out from your pocket and exchange it as soon as possible at any point of sales terminal at you wish. But gold can indeed serve both functions, as a reserve asset and as a form of liquidity. On the sovereign level, on the basic level, gold is a strategic reserve, diversifying away from natural and volatile currencies. But at the citizens level, technology has allowed gold to be more than a static asset. If you recall our previous presentation on July, that technology has made gold possible to be interchangeable. We have programmable wallets in Dubai and in some other countries where you can input a gold debit card and bring out and exchange it for any item you want. As most of you who are well diversified will notice that most of shopping malls, you can use your fiat currencies if you have, and you can also use gold to actually exchange value in real time. So this hybrid model, being as a reserve asset and as a form of liquidity, makes gold an accessible tool for financial sovereignty and inclusion. Now, we come to the subject of why are central banks stockpiling gold, and is it actually true that actually central banks are stockpiling gold? Before we even discuss on what central banks are doing, I'll introduce you to a concept of Basel III. Basel III is like an international regulatory body. Basel III is an international regulatory body designing capital and liquidity requirements for banks, and also designed by the Basel Committee on Banking Supervision. Basel III was just a set of rules and regulations designed to make banks have more access to liquidity, have more access to capital, and have more access to different sectors of the economy so that they can improve their risk management and withstand economic shocks. If you remember the financial crisis of 2007, 2008, or 2008, 2009, you can see that this group of central banks all around the world came together to form a list of policies that will safeguard the banks against economic shocks. Now, they recently released a document called Basel III. And in that Basel III, we have reclassified gold as a tier 1 high-quality liquid asset, effective July 1st, 2024. This means that banks and financial institutions can begin to count physical gold at 100% of its market value towards their liquidity reserves. So if you notice that the CBN gives a minimum ratio for liquidity, banks can now use physical gold, physical deliverable investment grade gold, as we call it, to count towards their liquidity, placing it on equal footing with cash and top-rated government bonds. Previously, banks were only using government bonds to count towards their liquidity ratios. But because of Basel III, banks can now use physical deliverable investment grade gold to count towards their liquidity. And according to the World Gold Council, we have seen a rapid increase towards the purchase of gold by central banks. In Q1 of 2025, gold was 1% higher at 1,206 tons, the highest for a quarter since 2016. We have noticed that central banks bought 244 tons of gold, which is a slowdown from the previous quarter, but comfortably within the quarterly range of the last 3 years. You can see a sharp revival in gold ETF inflows, more than doubling its total investment to 552 tons. And we can see that both bars and coins remain elevated at 325 tons, 15% above the 5-year quarterly average. All these statistics are showing that the move of Basel III to place gold as on equal footing with cash and government-rated bonds have prompted central banks to begin to purchase more and more of gold towards their liquidity reserves. The World Gold Council also reviewed a survey concerning central banks' gold investments. And as I rightly said in the previous slide, that 44% of central banks now actively manage their gold holdings. Before, they were giving it to vaults around the world to manage for them. But because of these new requirements, they are now bringing it back to their countries to manage it separately themselves. Now, 75% of central banks manage gold from other reserve assets. So they still keep cash, they still keep government bonds, but gold is now like a strategic asset for them to manage their investment goals. And which kind of gold are they buying? Are they buying gold watches, gold earrings, gold jewelry, or gold shoes, or gold necklaces? No, the most preferred form of gold holdings that central banks use is the London Gold Delivery Bars, with the Bank of England the most popular vaulting location. So central banks are not inclined to buy gold watches and gold necklaces as their liquidity reserves, but they're inclined to buy London Gold Delivery Bars or physically deliverable investment grade golds towards their liquidity reserves. Now, you may ask, okay, if central banks around the world are doing it, is Nigeria also following suit in this trajectory? Absolutely. You can see that on this slide on your screen, the external reserves for the central banks as of 2024 was 687,402 troy ounces. This was the amount the Central Bank of Nigeria used to keep their gold reserves or their external reserves, bullion form of gold. And we recorded that these audited accounts showed that Nigeria's external reserves grew to 54.70 trillion at the end of 2024, up from 28.98 trillion recorded in 2023. And gold reserves accounted for 5.1% of the total external reserves. So if central banks around the world have been making the moves to increase their gold portfolio, the Central Bank of Nigeria have also followed suit to increase their external reserves using investment-grade gold. And I fondly say, if central banks are doing the same thing, increasing their external reserves with bullion form of gold, investment-grade gold, you should actually be far more smarter than them and put your own investments in gold. Now, central banks around the world are buying gold at a rapid rate, seeking to hedge against perceived US macro stability and rising geopolitical risks. In a high gold price environment, this can support reserve adequacy and equip policymakers with the firepower to support their respective currencies. This was a report delivered by Finch Solutions. However, the strategy is not without its risks. A sharp drop in gold prices would undoubtedly expose external imbalances, especially for those markets which are also dependent on gold export receipts as a source of foreign exchange. But overall, the consensus that gold accumulation is not just prudent, it's not just a wise thing to do, but it's a core value of central banks in a multipolar world. In a world that is so plagued by volatile currencies, fiat currencies, gold accumulation is a strategy for central banks to actually make the most of their value. Now we are talking about gold triple-edged storage. We've talked about the risks involved, what central banks are doing, and we want to talk about why they are doing it for you. The risks involved, and in terms of monetary stability, inflationary pressure, geopolitical uncertainty, gold has consistently proven to be a reliant store of value. And why has it shown that? Because gold doesn't have any counterparty risks. It doesn't need any central bank governor of any country to come and validate its authenticity. It's a tangible asset that holds no counterparty risks. It doesn't need a signature, it doesn't need a government's approval, it doesn't need a financial institution to make sure that it's true and authentic. Definitely, it has been a hedge against inflation, and has countries continue to print far more fiat currencies to manage their debts across the world, gold price tends to increase. So the plaguing of the Nigerian environment with the fiat currency will make gold price be a far more store of value and a far more hedge against inflation against fiat currencies. Gold has investor confidence and trust. Gold functions fundamentally in trust, just like fiat currencies. When governments or central banks and the whole economy is sloping and reducing down the drain, most investors turn to gold as a safe haven. They begin to purchase more and more form of gold to hedge their investment portfolio. Number 4 is central bank accumulation, which I just explained in a couple of slides ago, that as of Q1 2025, global central bank reserves amounted to 36,252 tons. showing you that central banks around the world have begun to hedge their liquidity and give far more stability to their currency by purchasing gold. No, intrinsic value amidst fiat rand. You should know that gold is not just used as a hedge against inflation. As defined by commodities, gold has intrinsic value. It is valuable in itself. It's valuable in itself. So gold intrinsic value is a function of two variables, money supply and investor confidence. And as fiat purchasing power declines, gold retains or increases its relative value. Now, the most important thing why people even buy gold or why governments around the world have been purchasing gold is just its rapid performance. You should know that in 2024, gold did 121.5% according to the World Gold Council. And most countries actually recorded positive numbers for gold across the world. So if you had gold in the beginning of January 2024, reaching up to December 2024, your investment portfolio would have done a total of 121.5%. Money would have practically doubled, in quotes. And this is actually a good use of your investment portfolio as against bonds, shares, real estate, which have wavering interest rates. As I said earlier, central banks, pension funds, and insurance companies are turning to gold as a hedge against inflation, currency volatility, and systemic risks. But this shift brings its own challenges. To mitigate these risks, they must adopt a diversified strategy that balances gold with other liquid assets, ensuring they are not overexposed to price swings or liquidity shocks. Gold should serve as a stabilizing core within a broader reserve or investment portfolios, complemented with hedging mechanisms such as futures and options to cushion sudden price declines. Equally important is the development of infrastructure that guarantees quality and trust in goldings. If governments around the world don't have the valuable infrastructure to hold their gold, they will have to trust on international partners to actually give value for their money. By combining prudent diversification with risk management tools, people can begin to harness the gold stability while minimizing the effects of its volatility. Next, we are going to talk about the mind-smart integration. I told you that this conference was specifically chosen for Africa and for Africans. And we're going to talk about how Africa has not benefited enough from its own gold value chain and the strategies they can use to benefit and grow themselves. For decades, Africa has been the world's leading source of gold. Yet much of the wealth generated from this resource has been lost downstream. The continent exports the major form of gold as raw or unrefined ore bars, only to import refined bullion and finished products as a premium. You should remember that when we were kids, they used to call Ghana the golden coast of Ghana. Even though Ghana has taken strategic policies to actually make sure that the gold reserves balances its economic need, it was lost between the years. And this just shows you, the example of Ghana shows you how major countries have been exporting raw gold or unrefined ore bars only to import refined bullion at a premium. And there are a lot of challenges to why this is happening internationally and across the African continent. One of the major challenges is infrastructure deficit. To actually refine LBMA bars, you need to have sophisticated refining plants, assaying facilities that allow gold to be accepted at global standards. If you don't have this infrastructure to actually refine unrefined ore bars into refined bullion, you will have to be exporting the raw bars. The second is the regulatory and policy gaps. Most governments around the world have not begun to see gold as a real asset. Most of their reliable assets are actually stocks, bonds, and shares. But when they begin to see the need for gold based on their implementations of Basel III, we will now begin to get further and further across the continent. Next is external refiners. Countries like Ghana, Tanzania, and Nigeria have historically sent gold abroad for losing control over pricing transparency and purity verification. Definitely, the only LBMA certified refinery in the whole of the African continent is one in South Africa. So if there's only one refinery out of 54 African continents, you should see how most African continents will have to send their own refined gold bars across the world and bring refined products at a premium. We have also capital and technology requires, which is used to set up the infrastructure, and we have just the apparent transparency and trust issues. And this is not supposed to be so. We at Dukia Gold are clamoring for Africans to begin to own parts and more of its value chain through value retention. By refining and processing certified gold bars locally, we can capture more of its value of the gold value chain without the swings and influences of price. We are advocating for employment and skills development, that if you are building gold refineries in-house, definitely that refinery will actually open up the employment and skills development opportunities based on logistics, based on the assaying, based on the financial services, based on the vaulting partners, and every other integrations used to benefit itself. Now, a domestic mines market systems allows banks to purchase gold directly from local refineries and increase their reserves. In summary, mines to market integration transforms Africa's gold from just a raw extractive commodity into a fully monetized, tradable, and programmable asset. It closes leakages, builds trust, and ensures that gold becomes a pillar of both national economic resilience and everyday financial inclusion. So, for Africa to actually benefit in total from its gold value chain, it will need to actually implement a set of reforms. The first set of reforms is actually begin to trust the investment asset as a real store of value against other asset classes, and begin to enact policies that make sure that refining, processing, and certifying gold bars are done in-house. Definitely, Africa has at least 17 gold producing countries worldwide. And if we can harness using joint collaboration across the world, like the Andean Community Gold Institute in South America, the Nordic Gold Processing Hub in Europe, and the Association of Southeast Asian Nations, we can begin to harness our gold reserves and play a major role in benefiting from what gold is doing across currencies nationwide. Clearly, Africa's embrace of gold offers new frontiers. There is definitely the central bank stability with use of gold as an investment asset. There's definitely the trust and investor confidence by transacting with gold as a programmable asset. There's definitely the store of value and the employment opportunities that gold refining in-house does across the world. And definitely Africa needs to be a part of this. Nigeria has shown an interest. If you could remember the presidential artisanal gold mining initiative by the former president Muhammadu Buhari, it was a policy move to show that central banks can begin to purchase domestic production of gold in-house and use that to count their reserves. Comparing with South Africa's established FBA certified refining base and Singapore's tax regime, Nigeria is actually getting there, but we are far from the mark that gold refining globally has to do. The challenge is just ensuring that gold serves as a pillar of sovereignty rather than another lever of vulnerability. And with regulations, education, information, and all the other things they need to do, by constantly giving them the interest that gold is actually a true asset class as compared to all other assets, most governments and most countries around the world will definitely benefit. So we are now pushing forward for the central bank-backed purchases of domestic production. Nigeria has shown interests. The Ministry of Solid Minerals Development are beginning to clamor for this. And we are definitely sure that in time, Nigeria will begin to benefit from its full value of its gold chain in-house. And that's what Dukia Gold is doing. We are not just opening up or replicating a Western model. We are bringing it up to the federal government and to you as an individual, so that you begin to hedge your own value for your children, and the government begin to hedge its own reserves in a store of value that cannot be devalued, not just in fiat currencies which have no intrinsic values, but in commodities which have intrinsic values like gold. Now, who are the company pushing for all these initiatives? Dukia Gold is a lead. We at Dukia Gold are a leading gold and precious metals reformer in Nigeria and West Africa. We specialize in responsibly sourced raw materials, including gold ore, and refining these materials into high quality gold delivery bars. Starting since 2019, we've actually pushed for the investment of gold, not just for the central bank governments as a whole, or central banks or governments as a whole, but for individuals beginning to trust and hedge their values in gold. You've seen the performance, you've seen the trust, you've seen the fungibility of gold as an investment asset. And we have been actually pushing this initiative across the African continent since 2019. We've been featured in so many newspapers, as you can see from the slides here, like Guardian, NIPC, Business Day, Business AM, SEC, and All Africa. And we are ensuring that gold actually, that if you as a customer purchase gold from Dukia Gold, you are purchasing gold of international standards. Through our regular audits, rigorous sourcing processes, and transparent transaction processes, we'll ensure that investors and their transactions are supported by best practices in handling, storing, and securing gold assets. We are partnering with a lot of international organizations on the concept of gold, making sure that you get the real value for your money across the world. In conclusion, we must actually, as a whole, begin to see gold not just as a natural resource under the ground, but as a strategic reserves. Countries all over the world have been doing it. The Basel III that was in effect in July 1st of 2025 shows that gold is not just an asset that is kept under the ground. Gold can be actually placed in tandem with cash and government bonds. So for you as an individual, you should begin to think about investing and open up your investment portfolio to gold because of its performance, because of its safe haven, because of its portfolio balance, because of its use as a private wealth, and because of its inflation hedge. You as an individual stands to benefit more from investing in gold. Even if central banks around the world have not seen the need, you can begin to invest in gold to give better value for your children, for your parents, and for your families across the globe. And how do you do it? Just log on to new.dukiapreciousmetals.clue, sign up, enter your personal information, verify your BVN, and complete your registration. In just 5 simple steps, will open you up to a world where you can begin to transact in real, tangible assets. Thank you so much for staying with me throughout the course of this presentation, and we'll take turn for the question and answers. Thank you. Chairman, sir, you have the floor.
Again, thank you so much, Emmanuel. You've done me proud once again. And on behalf of all of us at Dukia Gold, and I'm sure the listeners, thank you for educating each and every one of us about what we thought we knew and what we now know better. Money exists as a mode and a means of exchange. Money exists as a store of value. Again, be very reassured there are 3 types of money. Money issued as fiat currency only has value as long as the government says it has value. If you remember, once upon a time, there was one thing called Deutschmark. Once upon a time, there was a currency called Lira. Once upon a time, there was a currency called even the Nigerian pound. Government can cancel that overnight. And if government can cancel a fiat currency, what will happen to you if you had a lot of it? Nigeria just attempted to cancel the Naira, but thank God for President Bola Ahmed Tinubu, who has allowed 2 types of currencies to run pari passu. So you have the old Nigerian note and you have the new Nigerian note, and the 2 of them are currently in circulation. One thing about the difference between the different currencies that this gentleman has presented is that gold will always be gold. No one can cancel gold. No one can manufacture gold. Gold must be brought out of the ground in a very, very particular way. It's very rare and is always there. I also have good news for you. The reason why we are increasing part of our tempo of speaking to all of you about buy gold is that Dukia Gold has engaged in material exploration activity. And I'm very pleased to announce to you that God has indeed blessed our effort. We now have in excess of 1 million ounces of gold in our reserve. And because we have that, it's imperative that we let you as a Nigerian enjoy part of that wealth in your own portfolio. After all, nothing good is good unless other people can taste out of it and confirm and certify that it's good. The world knows that gold is good. The Americans used to keep it as gold standard. Whether they like it or not, they are going back to it. Because if you notice, the COMEX and of course the London Bullion Market Association has featured materially in the news of recent. And the joke is said, Trump put a lot of tariff on Switzerland. One of the most important things that Switzerland sends to America is gold. Guess what? In less than 24 hours after the tariff was slapped on all Swiss products, gold was immediately exempted. So because gold has been exempted even by America, it must be clear to you that gold is important, not just around the world, but extremely important even to the Americans. Again, if you see the list that our presenter showed, every country in the world is trying to acquire more gold, especially China, especially Europe. And of course, everybody recognizes that if the central banks are doing it, something that must happen is that the pension funds need to get into it. Certainly, the pension fund managers need to get into it. The private equity must get into it. Everyone who is looking at his asset and investment portfolio must get into it. The last thing that I would like to thank the presenter for is that he has also shown us that gold is indeed a very good commodity. So crude oil is a commodity. Cocoa is a commodity. Such is also wheat. And of course, you would also say that, yes, you have access to a commodity called maize or corn. One thing I want to try and educate us all about is that in the 60s, Nigeria had the unique opportunity of discovering a lot of crude oil. But unfortunately, Nigeria did not allow crude oil to be domesticated. But we would like to thank the federal government, especially President Bola Ahmed Tinubu and the current minister, for allowing the Nigerian mining industry to be fully domesticated. And one of the greatest beneficiaries of the mining industry is Alhaji Aliko Dangote. They say he's the richest person in the world, correct, only because he has investment in the natural resource industry. Anyone who has also looked at the performance on the stock exchange will look at a company called Presco. Again, they, of course, are bringing out a lot of crude oil, and that crude oil is actually called palm oil. And again, the reason why they are there is that they are benefiting from the natural resource of Nigeria. What the federal government has done is that they have allowed Dukia Gold access to an exploration license. And for the very first time, a Nigerian indigenous company called Dukia Gold is able to explore grounds in excess of 184 square kilometers and discover what is beneath the ground that is held as a commonwealth for the rest of all of us. So today, it's possible for us to bring out gold, and rather than sell it like NNPC to the white man who then burns it and then gets it back to us as PMS, until recently when Dangote said, oh, I have a refinery that will make it local. In the mining industry, the federal government had actually done the right thing from day one. They gave Dukia Gold a refining license. And now they have also given us, and we have also discovered gold from under the ground. So it's easy for us now to say, yes, where should we sell the gold? Do we want to sell it to London? Do we want to sell it to America? Or do we want to sell it to Africans and Nigerians in particular? Our choice is to try to sell gold directly to you. And our job is to ensure that you understand why you need to buy gold so that you yourself can begin to behave like the Chinese, the Americans, the Europeans, who buy gold, not just for their country, into their national reserve, but also buy and hold gold into their precious personal reserve. And in fact, you would notice no insurance company in China can exist unless he has at least 1% of his total asset in gold, minimum. And therefore, if Nigeria were to do the same, we'll find a lot of stability in our currency. If every Nigerian were to do the same, keep like the central bank 5% of your portfolio in gold, of course, you will find that the benefit will be total. The question everybody says is, oh, how do I have access to gold? Dukia Gold is giving you two options. Buy physical gold, and we'll also give you a second option. You can actually join us as a shareholder very soon and own part of the gold assets that we have as a stakeholder and as a shareholder. Again, I want to thank you, Emmanuel, for making this a very worthy presentation. I want to let everybody, again, sleep, think, rest on that fact. You need money, but in what form are you going to keep your money? Try every time to keep a bit of that in gold. After all, like I said from the beginning, if you had Naira in your pocket and you showed up in England and you give that Naira to somebody as your mode of exchange, they will shake their head and say, we don't accept it here. Take it to Bureau de Change. Unfortunately, if you go there, they will say to you, no, we don't accept it as an international currency. It's a local currency. But if you have gold and you went to Acton Garden, or you went gold and you went into a pawn shop, everybody instantaneously recognizes gold. They'll give you your pound sterling. There are things that we're doing that would ensure that everyone is able to have gold and is able to financialize their gold in a way that is consistent with expectation internationally. We'll have a workshop on that by the grace of God next month, and that's what that would be about. So at this point, any questions, please type it. Once the questions are typed, they will be gathered, and then we'll be able to respond it. Again, I want to thank you very, very, very much for your rapt attention. And I want to also ask everybody to please visit the trading platform. It's new Dukia preciousmetals.co. And if you can visit it, register today, buy gold. You are free to buy as little as 5,000 Naira every day, or you can actually go for an ounce or a kilogram. We would always do the right thing. We have your KYC, and therefore it's easier for us to say, okay, because we know who you are, we therefore know who we're selling to. You also have our KYC. We'll be here every month to continue to educate, inform, and communicate with you. On behalf of all of us at Dukia Gold, I would say whatever questions you want, please type it and then let us be able to respond to you. I yield the microphone again to you, Mr. Emmanuel, just to give guidelines on how to ask questions.
Okay, thank you very, very much, sir, for that, for those supporting clause and everything you said. Please, if you have questions, you can type it in the chat so that we will attend to it as soon as possible. If you have questions concerning managing your accounts, if you have questions concerning what we are doing, why we are doing what we're doing, and most importantly, if you have questions concerning our current presentation, Gold has Africa's strategic reserves, please just let us know in the chat and we'll attend to it as soon as possible. Okay. I can see a question from HJ. He said, how do I get started? Simple. Just go to this website go to that website and you find a place to actually register and start as soon as possible. Just head over to that website, new.dukiapreciousmetals.co on the platform, and you find a way to register. Once you sign in and you have any questions or you feel you need help to actually follow through the process, you can just reach us via the email on your screen. And we'll attend to you as soon as possible. Please, if you have questions, please ask. Okay, with how much? Now, as an individual, you can start with as low as 5,000 Naira. At 5,000 naira, it has 5,000, as low as 5,000 naira, you can definitely begin to purchase gold from your end. Now, how much is the gold per gram? Because gold is cannot be actually given in physically, we will advise that you just go to the website and you see a copy of how much gold is per gram, per 1 kilogram, 5 gram, 10 gram, any amount. It's just written on the website, Mr. Philip. So you just go there and see. You said you are not. I have a question from Bukola. Is gold more secured and has a better yield than MMF? I don't know what MMF is. Bukola, so can you please rephrase it? I don't know what MMF is. So I know gold is a very secure and stable asset, but I really don't know what you're comparing it with. So Chairman, sir, somebody asked question on regulations. How are we doing with regulations? We're definitely licensed by the Ministry of Solid Minerals Development, and that ministry is where we get our credentials and our licenses to actually invest. Oh, money market funds. Absolutely. Gold is far more secure and better yield than money market funds. Okay, you can let's just do a simple arithmetic from January to December 2024. Let's just use that as an example. How much did the money market perform from January to December 2024? I think if you're looking through the NGX released a statement of 35%, 35 to 36%. Let's just give a best example, 35 to 40% from January to December 2024. Now, how much did gold perform from January to December 2024? As a comparison, and according to the World Gold Council, gold performed 121.4%. So throughout 2024, you can see that gold performed far better than the money market fund. I'm not talking of gold as a jewelry. I'm talking of investment grade gold, physically deliverable investment grade gold. So it actually performed better than the NGX from January to December 2024. I hope that answers your question, caller. Please, if you have more questions, just input them in the chat and we'll take it as soon as possible. Okay. Are we listed on the Nigerian stock markets? Not yet. We're not currently listed on the Nigerian stock market, but we are making effort to do that as soon as possible. Chairman, sir, you want to say something?
Okay. The gentleman who asked how much is a price of gold. Again, please go to the new Dukia Gold .com, the trading platform. On the trading platform, you will have the three most important information that you have asked for. What is the international price of gold as set by a association, which is the London Bullion Market Association? You'll have that, so that's the price at which everyone in the world who has a lot of money and who is buying at extreme wholesale price basically gets to know what the reference of the benchmark price is. Thereafter, the benchmark price is then, of course, taken by all of us and as a reference.
So we can hear you.
Also is that price which we give you is a reflection of the international price, such that if, for instance, the dollar tomorrow, if you want to sell it, you will get to enjoy the fact that you've protected your asset against foreign exchange fluctuation, and therefore you will get to sell your product at an exchange rate of 1,800. Of course, if there's been a further appreciation in the price of international value of gold, you then get that second advantage. And like the speaker told all of us, last year was a very good year, unique in many ways. Most of the people who took time and took the effort of investing in gold had 100 and plus return on their investment. So if you had put in maybe say 1 million naira at the beginning of the year, bought gold, you would have had two opportunities in that entire 1 year period. The first opportunity is the price of gold moved up materially, and unfortunately, the price of the naira to the dollar fluctuated in the wrong direction, and therefore you would have had yourself properly protected. So that's for that.
Please, if you have questions, still drop them. I'm answering a lot of questions in the chat. So if you have questions, just drop them in the chat and I'll attend to it as soon as possible. Okay. If you have questions, please just let us know and let us attend to it as soon as possible.
Yeah, I apologize. Sometimes in life, you make rules that affect you also. I was bumped off by the system and I couldn't unmute. So basically, what you would do is you find out that today 1 gram of gold is 250 something thousand naira. Again, it reflects the strength that 1 ounce of gold is actually in excess of $3,300. There's a prediction that it will get up to $4,000 as the year progresses. There's a bigger prediction that it will get up to 5,000 or 6,000 within the next foreseeable 2-3 years. And therefore, everybody predicts that the price of gold is going north, basically. So if you can buy gold today, buy, hold for a long time, and you'll be happy and grateful that you did. The second thing that we would like to say is that because we have found that everybody is new to gold and everybody wants to try and buy it on a gradual and cautious basis, we have had to listen to what they call a minimum viable product and a minimum viable value. The minimum viable value is that we know that some people would like to say, yes, over 10 months, over 20 months, over 1 year, I would like to save up to buy 1 gram of gold. So it's simple. If you have, and you can make 5,000 naira every day by way of ajo, rather than pay the ajo in cash, why don't you put that ajo money in gold? So we have people that we believe are the lowest rung of the so-called investment market who maybe are daily produce sellers. They sell maybe banana, they sell plantain, they sell roasted corn. They are able to put 5,000 naira away in gold every day. If you multiply 5,000 by 300, hopefully, it will give you just about enough to say to them that they have done their savings in multiples of thousands. Now, if that is therefore done, what it will do is that it will inch them closer to owning 1 gram of gold. While they are doing the so-called 5,000 naira a day, they are doing what is called a pool allocated purchase. And it works because if you've ever drank from a crate of Coke before, there are 24 bottles in a crate of Coke. If somebody is brave enough to buy it, put it in the chiller and bring it out for you every time you ask to buy Coke, that person sells one bottle out of 24. But if that person is good enough, like a good hotel, maybe he's selling one bottle out of a whole trailer load of Coca-Cola that's in his so-called store. So we are good enough to be able to sell you discrete allocated individual pieces from 1 gram up to 1 kilogram and multiples thereof. We're also good enough to give to you today part of 1 gram. And therefore, if you make it all up to 1 gram, then you can apply or give us the instruction, and then we give you a discrete allocated gram of gold in your hand. Each of the gold we sell is deliverable. And what we also say to you is, yes, take delivery, but you take delivery and then to bring it back to sell takes a while. So we don't say to you, take delivery. We actually encourage you to keep it in a vault such that if you then wish to sell it, all you give is just another set of instruction such that that vaulted gold can be sold back easily and your money can be given to you, especially when you have joyful increment, both in terms of value of gold and both in terms of the foreign exchange that you have kept it in. One thing that we're also doing is that we have seen many people keep their asset with us now, and we're very happy, but we don't keep it on our bank. We don't keep it in ourselves. We actually keep it with a third-party person called Brinks. And Brinks has been very kind and is one of the most renowned vault keepers of the world and in the world. And they keep gold for us, yes, but they also keep it for the Bank of China, Bank of England, Bank of Switzerland, UBS, Citibank, anybody that you want to think is big enough that needs to vault gold, that's where we do. We don't keep gold at all in any of our premises. If you ever see gold, it will be a rock, not gold. The reason is simple. Nobody buys gold and keeps it on his person, especially if it's investment grade gold. If you want to also sell it, it's best that that gold should be available to be able to give to the next person that needs it. And the only person that needs it will be somebody like you who also has woken up to the reality of it. So to make it fungible and to make it financiable, we have also created this platform so that at the touch of a button, you can sell your 1 gram of gold back, or as part of the pool allocated that you have accumulated, you can always sell it back. We are actually also going to give you, as a member of the Dukia Gold ecosystem, what is referred to as the Dukia Gold Card. That Dukia Gold Card is a debit card that allows you instantaneous access to your gold and would allow you at the Nigerian POS in the beginning or at the Nigerian ATM to be able to put that card in and say, guess what? I want 20,000 naira. I want 1 million naira. All we have to know is that, yes, you have in your asset, in your wallet of gold, maybe you have up to 10 grams. And if you have up to 10 grams, it means you have 2.5 million naira today. So if you went to buy a TV or you went to buy a fridge, you'll be able to hold that Dukia card in your hand and be able to give it to the so-called merchant, and the merchant will be able to give you your television because, like the speaker told you today, gold used to be a money, gold is still money. Gold used to be a commodity, gold is still a commodity. Gold used to be an investment, gold is still an investment. Gold used to be a mode of trade by barter. So we are returning gold to be able to do trade by barter in a manner that is super efficient in the modern technology. POSs would accept a trade by barter so that you can actually trade your gold in exchange for your TV. You can actually trade your gold in exchange for your fridge. You'll be able to trade your gold in, hopefully, in exchange for a plane ticket. You'll be able to exchange your gold even for a room in a good hotel. And that's what's going to happen to you. And by the special grace of God, every one of us who is a member of the Dukia Gold family, who is a member of the Dukia Gold Club, will be able to, of course, begin to experience the good value and the good valuation and the store of value of gold in a manner that is very, very consistent with your expectation and expectation. Emmanuel, I hope I've answered the questions you have thrown at me. I yield the microphone.
Yeah. Yes, sir. Yes, sir. But I have one concerning, I think it was concerning the refining. Was asking of, okay, how much infrastructure we'll need to put forward the whole refining process. I don't know whether that would be
To refine gold.
To refine gold. What is our plan concerning the infrastructure?
Okay, to
Infrastructure
refine gold, you first need to find gold from under the ground. Yeah, so Nigeria has done well by granting us a license. We have found the gold now. The next thing you need, of course, is the environment by the state governments. The 3 states where we have found gold, the state governors are in excellent position in terms of creating the right environment. The federal government itself has a genuine salesman in the Minister of Mines, Professor Dr. Egbon, I will call him Dele Alaki. He's Nigeria's #1 salesman when it comes to telling the people of the world, make Nigeria a mining destination. Now, when you do that, you then need, of course, a cacophony of equipment called Caterpillar, called Sanyo, salt, whatever. Building a gold mine is like building a road. So when people say that, oh, they are going to see the Lagos, Lekki, Express, Calabar Road, that's peanuts compared to coming to see what is happening in the mine site. Of course, one of the longest sets of roads you would ever construct in your life is in a mine site. And I will ask some of you one day to come along with us to come and see what a mine site looks like. It's a very huge infrastructure. For that to happen, of course, you need good investments. You need investment from the bank, you need investment from individuals, you need investment from across the world. Nigeria basically is beginning finally to emerge as an investment destination for solid minerals. We were previously known for oil and gas. And again, I repeat, if you look at one of the largest success in mining, it's Dangote, it's BUA, it's WAPCO, it's whatever it is, they are doing only cement. When you consider what Dukia Gold is about to unleash, we will be maybe just about the size or bigger than anyone who is currently listed in the mining sector on the Nigerian Stock Exchange. We'll do a private placement first, that's what they call it, wherein we'll be able to talk to a few people who have money and who are, again, interested in joining us in growing our so-called production capacity. We intend to grow from 2,000 tons per day production to something in the region of 40,000 tons per day production. That requires a huge quantum of leap from where we currently are to where we want to be. But begin with the end in mind. When we do the private placement, we would also eventually approach the Nigerian Stock Exchange or NSDQ to be able to get ourselves listed. Currently, as a company, we are properly registered with the Securities and Exchange Commission under what they call the incubator project space. We are fully there. We are registered with SCUMU, which is the EFCC. They monitor what we do. We also monitor what we do. They're very big on KYC. We're extremely cautious on KYC, and therefore we're clear. We are also registered and monitored by the Ministry of Trade and Industries. We are also monitored and, of course, we need to be in full compliance with the London Bullion Market Association, with the World Gold Council, with OECD, with Minamata Convention, and a host of other international things that we need to do. We are an over-regulated entity, but we are happy to be over-regulated, such that everything we give to you and everything we bring to you is very safe and is very durable. After all, check any Bible, check any Quran, check anything that you want to do by way of looking at any of the holy books, you will find gold there. If you also check any history, Mansa Musa, everyone knows, traded in gold many years ago, kept gold as money. Gold cannot be cancelled. I repeat, gold cannot be changed. Even if a country says, I'm changing my currency, if you have gold, trust me, they can't touch you. The most important thing is, even if a currency gets devalued because the government has printed too much cash or is doing all manners of gymnastics, what happens is that everybody will simply say, take your cash back, take your fiat currency back, give me gold. So if you are smart to store gold well ahead of when everybody wakes up to say, take your cash, give me gold. You'll be the one who will be able to sell your gold back at a higher price if you still need that currency. Or if the world has chosen to trade somewhere else, then because you don't go with a word of cash from their country to go and say, this is my cash, give me currency. What will happen is that you simply just take your gold to the new place where you need to buy your product, and everything is going to go your way. Let me give you a good example. Many years, Zimbabwe used to think that life would continue. One day, the world switched off the entire effort of the so-called Zimbabweans, and they converted their cash to zero, technically. It was very, very commonplace for us to go into Zimbabwe. They have gold, as you know, and you will find out that $1 American was being exchanged for 1 zillion so-called Zimbabwean dollar. It was a joke, but they actually went ahead and printed currency. And sometimes you wanted to go to the so-called supermarket, you truly needed a wad of cash carried by a wheelbarrow just to buy bread. We don't pray for that anywhere in Africa, but the best way to do is show up with 1 coin, 1 ounce of gold, and I'm telling you, you will buy everything you want to buy conveniently, including petrol and all the rest of the things that you need to have. It will happen again, given what America is doing around the world. And so therefore, my plea to everyone who is listening to this is, please protect your wealth, buy a bit of gold, keep it safe, and make sure that truly you look at your investment portfolio. Minimum, keep 5% of it in gold if you are going to mirror a central bank. But given what we know, and if you don't have a precautionary need for cash, keep most of that cash in gold. But if you, of course, need gold and you also need cash, you better keep that cash so that you don't have to go through whatever. But we're also solving that anyway. Once you get the Dukia Gold Club card, that will make you be able to get financialized with your gold. Thank you very much, Emmanuel.
Okay, thank you very much, sir, for addressing refining processes. Please, if you have more questions, just drop it in the chat. Because the time allotted for this presentation is limited, I may not specifically address far more questions in depth. So questions containing topics that are not specifically related to presentations and just customer-related complaints, to address it in depth, I won't be able to do that here. So I will still input emails, so you can just send us an email so that we can just clarify all your remaining questions here.
Okay, so just before you shut down, I know that you have less than 2 minutes. Just let me quickly address some things. Everybody knows that there's a buy price for a product and there's a sell price for a product. And there is always a difference between the two. They call it margin. If you went to buy dollar today from an aboki, you will buy it at a particular price. That same dollar, if you took it back to that aboki, you would also buy it from you at a particular price. Oftentimes, when you buy from the aboki, the price at which you buy is a bit higher. And if you take the same dollar you bought to him the very moment you bought it, and you say you want to sell it back to him, he will buy it at a lower price than he sold it to you. So that's the same way with buy and sell. It has nothing to do with us. It has to do with the way in which the world trades currencies. And like it is shown, gold is a type of currency. It's also clear that if I also went to Okeani and I wanted to buy a bag of rice, and I bought a bag of rice and I came to my street and I opened a tiny shop and I put it in modus, that's what they call it, or in cans. And I started to sell maybe just 1 kg of rice out of 50 kg. If you look at the price at which you buy 50 kg of rice, it will look like as if the price of 1 kg multiplied by 50 would look like a lot more. Of course, there's what they call the cost of holding stock and the cost of breaking value, or what they call creating tiny little products out of one value. Again, if you've ever been a young man and you went and bought 1 bottle of Coke to be shared by 2 kids or 3 kids, you will realize that the person who bought the bottle will charge you almost nearly the same amount of money that he used to buy 1 bottle before you can share out of it. Such is life when you do break bulk and when you have to do full allocated of course, you will have a little challenge. So if someone were to buy bulk, he will get bulk discount. If somebody was to be looking for the low end of the retail, it will also show up in the kind of price. But we've done all that we can do to make sure that the pricing that we give to you is fair. The reason is simple. In the trading in the world now, where everybody can go online and check, we have continuously looked at what others are doing, and we are very confident that we are going to continuously give you the very best acquisition price. Again, for those of us who say, I want to buy gold today and sell it tomorrow, it's possible if you are lucky enough that the price moves up suddenly. But gold doesn't just go up suddenly. Gold goes up steadily. Like we said, is a stable coin, is a very stable way of keeping wealth over the long run. So if you look at the map of how gold has gone in the last 1 year, you will see that it's been a very gradual climb. But if you also see it over the last 20 years, you will see that it's also been a very gradual climb and with very material returns. But of course, in between the moment, in between days, in between hours, in between minutes, sometimes it fluctuates fairly rapidly. Reason that if there's trouble in America, it will show up. If there's trouble in Ukraine, it will show up. So the vagaries of the world shows up also in the pricing of the product. Therefore, I would like to urge all of us who are going to invest in gold to look at the long run costs of gold versus the long-term investment in gold. Is when you invest in gold over a period, 1 year, 2 years, 3 years, 5 years, that's when you get the best out of it. And I'll say it very certainly. If you bought a new house or built a brand new house, it's always very difficult for you to fling or sell that house the following morning. Gold, again, is like an investment. If you buy it today, you are not going to be very clear to sell it tomorrow, unless, of course, you are a very big strategic player who do volume. Oftentimes, I ask Nigerians, how much can you buy in gold that would make the market? Please, gold is fungible, is spread across every country. Nobody can technically game gold. What everybody can do is allow gold to stay in your portfolio, balance the risk, diversify away from any kind of inflation, and ensure that on the long run, you get the maximum benefit from being a gold holder. Again, please, we will continue to answer your questions offline. And if we don't have any reply, again, we have our web, we have our email, we have our info@Dukia Gold. Send any question you want. We would always answer it. Ask any question that you like. We would always try to answer it. If it becomes impossible, we can always take your question, turn it into a webinar so that everybody educates themselves, inform themselves, and of course, communicate with you on how best to handle your investment portfolio in gold. I will end again by reminding you, money is gold. Gold is money. Currency is gold. Gold is currency. Investment is gold. Gold is investment. Commodity is gold. Gold is commodity. Not many other things can say that they are what gold is. After all, dollar is money. Dollar is currency. Dollar is not an investment. You can only invest in a dollar-based instrument. Therefore, know the difference. Don't store your wealth in dollar. Store it in gold. You'll be happier, you'll be safer, you'll be more educated if you do. God bless all of us as we continue our day, and may we always be prospered by God till we meet again. God bless you all. I'm very grateful.
Thank you so much, sir, for helping us and helping me especially to actually address all questions. Thank you so much for being part of us for this webinar. As our chairman has rightly spoken, that you need to begin to now consider how to diversify your investment portfolio. If gold has been placed in tandem vis-a-vis cash and dollar denominated bonds, and even government denominated assets. You as an individual needs to take the initiative by investing part of your investment portfolio in gold. We normally recommend between 5 to 15%. By investing part of your investment in gold, in physically deliverable investment grade gold, you'll be far better off than all the economies of the world while they are navigating volatile fiat currencies. Thank you so much. For any questions that I couldn't just type or I couldn't answer or we couldn't address, just send us an email to this and we'll address it in detail. I know most questions were coming up and I couldn't just address them very, very well. So I recommended that just send us an email. We'll address your questions in depth. Please and please visit our website so that you can begin to take benefit of this program. The webinar links and everything will be shared to so far you are registered and you are here, you will get information concerning the presentation and it so that you can easily reference and get by. Thank you so much, all our directors, from the chairman to the managing director to chief operating officer and everyone who made sure that this presentation was down in earnest. Thank you so much to all the co-hosts. Thank you and to you, our customers, our investors, for being part of us. Thank you, and thank you once again. The email will be dropped at the chat just in case you need to take a screenshot or in case you need to write it down so that you can be beneficial to that. Thank you so much. My name is Emmanuel.
Okay. Thank you very, very much, Emmanuel. Again, we look forward to welcoming you next seminar, which will be the last Thursday of every month, as we always say, last Thursday of every month. So the next seminar is in September. Mark your diary, 12 o'clock, last Thursday of the month of September. It will also be there in October, and we look forward to you, Emmanuel. Again, everything we say is just a loose advice. We know that we are not an advisory firm. We are a gold bullion merchant, and we are also basically doing a mines to market integration. So we are going to have a proper gold mining entity called Aniola Minerals Development. Please, whatever you have heard today, read up again about it. But more importantly, go and talk to your financial advisor, your accountant, your lawyer. And more important, please spend quality time with your portfolio manager. They are the ones who can help you honestly look at your portfolio and tell you what portion is 5% and what portion should go to where and what portion should stay here. But if you get to them, let them know that you did hear most of what we have told you, and they can either cross-verify or reconfirm to you. Don't take unilateral decisions without your investment professional. Work with a broker sometimes, but we've also taken away brokers from basically interloping. So we say to you, work with your financial advisor. Most of the time, you'll be happy you did, and God will be kind to all of us. Once again, please have a very safe and a prosperous new month of September. We look forward to seeing you. And again, if you're interested in joining us as a shareholder in the mining section of our business, please drop us an email and do everything that you want to do to get in touch with us. We would, of course, respond very quickly. The last one, which I just need to mention, is this. Everyone can get a copy of this email, all on this presentation. Please, all we want you to do is that please register as a customer. Even if all you do is buy 5,000 Naira worth of gold just to be a customer, I'm sure it's not too much given the value and the quality of the information we present to you every time. That way, you are part of our so-called ecosystem officially, and we therefore know that when we send you very expensively prepared documents like this, it takes money, it takes time, it takes research, and therefore, if you were to sell it, you'll probably be paying 60,000, 100,000 just to attend, but it's given to you, well, technically pro bono, but we expect that you use it to improve your portfolio and, of course, call your friends, your family also to do the right thing. And therefore, what we are saying is you will get a copy of this. All you have to do is go on New Dukia Gold, the trading platform, register as a customer, and of course, automatically a copy of the presentation will be emailed to you officially through your trading platform account. Thank you very much, Emmanuel. Over and out. Thank you. God bless us all till we meet again.
Thank you so much, sir, for this. Just register on the platform and you'll be communicated all the details. If you need help, send us an email at support@dukiapreciousmetals.co. I will definitely respond. Or even if you don't want me to respond, I'll give you a call. Thank you so much, and bye for now.